Sharp recovery on Dalal Street from the day's low. The Midcap index recovers 1,300 points from the lows. Financials in the green, while realty as well as industrials, they're the big losers today.
On the eve of Prime Minister Narendra Modi's visit to Washington, Republican Congressman Rich McCormick tells CNBC-TV18 that the US would like better military sales to India and less buying of Russian oil. On a positive note, he adds that the US will turn to India for products that China makes.
The government is set to table the new income tax bill 2025 in Parliament that will become effective from April 1st, 2026. The bill is expected to simplify India's income tax laws for the ease of compliance.
And January sees almost 40,000 crore rupees of flows coming into equity mutual funds in line with the strong flows seen in December. Hybrid funds also find favor with investors. Hello and welcome. You're with us on Halftime Report. It's noon and we are here with the latest, and we're actually here with some good news. I'm Surabhi Upadhyay. With me as always is Nigel D'Souza. And Nigel, the good news is that investors have kept the faith. This market has been testing people's patience, testing people's belief and strength, but that belief is intact because I'll tell you what, equity funds have got around 40,000 crores and it's well distributed. Even mid caps and small caps, they've got a very decent amount of money in the month of January.
Well, that's right. You know, Surabhi, and besides valuations, besides the FI outflows, there was one cause of worry was why is this mutual fund data a little bit delayed? You know, that was one data point that was coming in late last evening as well. When I spoke to quite a few market participants, they were like, we want to see this data point. You know, is there a reason that it's been delayed? Yeah. And as you're saying, it's fairly good. So that's a positive. And also just another positive with regard to the trading action of today. One is on the Nifty. You know, we made a low of around 22,800. So the question that is now arising from technical experts is a double bottom in place? Because, you know, on January 27th, we went down to around the 22,787. And today as well, we were almost at that mark. Maybe too early to call it, but at least that is one data point that the bulls are clutching onto. And the second data point, Surabhi, is with regard to the, the mid-cap index. The number of stocks advancing at the low of today was only around 180 stocks. That number has recovered to around 1,000 stocks as we speak. So the crisscross lines come up here on the screen. They were way apart. Now they're getting a little bit closer. So that's what will make portfolios feel a little bit good. For the time being, we're happy to see a bit of a recovery. That said, let's focus on the realty space. Keystone Realtors, that's the first management on the show. The numbers are actually, you know, before we get to the realty space, we have Lata who's joining in to tell us more about the rupee. Well, Lata, yesterday you told us, you know, there was an attempt to scare away the speculators and, you know, shoo them away. Today as well, I mean, the rupee, after pulling back, I think it's now finding some level of stability. Tell us what you're picking up.
Well, that's exactly the chatter in the market, that last 2 days we saw an extraordinary rally in the rupee in the face of dollar strength, in the face of other EM currencies falling. But today, that's how it appeared to start. At one point in time, the dollar was as cheap as 86 rupees 32 pice. You'll get an idea of that only if you know that the low just about 48 hours ago, 72 hours ago, was 87 rupees 95 pice. So look at the kind of rally. But at that point, the Reserve Bank appears to have let go. So the opinion in the market seems to be that the Reserve Bank was just wanting to scare away speculators. Of course, the rupee will fall in the face of foreigners coming in and buying dollars as they repatriate their equity money. But it cannot be that I get up early in the morning and take a position at 88 rupees because I know that people will come and sell. That easy money is what they wanted to stop. So excessive RBI intervention was only to meet with excessive speculation. Since it appears that excessive speculation is now kind of scared away because it has been hurt, the Reserve Bank's volume of intervention will also taper, or at least it appears to have tapered already, because after hitting 86.32, the rupee has cheapened again, or has fallen again to 86.83. That's, you know what, almost a 50 pice fall in the rupee. But the point is the Reserve Bank is now comfortable that it's moving more in line with market demand and supply.
Okay, all right. Thanks a lot, Lata, for giving us that update. You told us yesterday the RBI was trying to scare away the speculators. For the time being, they believe job is done, at least for now. Let the rupee find its own course, and if required, they will intervene. So that's about the rupee. Let's turn attention back to the markets, and let's focus on the sector that's been very, very hot in the last 18 months or so. But in terms of stock market action, well, off late, the realty index itself has come off the top. Let's welcome Baman Rustam Irani, the chairman as well as managing director at Keystone Realtors, who joins us on the show. Hi, Baman. Good day, and always good to see you in. Well, before we get to the numbers, tell us first, how is demand on ground? Is it as rock solid as ever? From a stock market perspective, like your stock, all the other real estate stocks as well, they seem to have lost their way a little bit. But that's about share price. What about demand on ground? Good enough?
Hey, Nigel, it's always good to be on your show. I just want to tell you that demand is very good as of right now. Even numbers of January, if they are seen in terms of registration, you will realize that the sales are as they were, as strong as they were in the past quarter. The 12,000, registrations have taken place. We don't see any reason for this to slow down. As a matter of fact, the budget which has come is going to definitely make sure that, the realty business gets a further fillip and people are able to kind of invest in the homes that they desire. So we are looking forward to a great financial year ahead. And I think for this year as well, we are doing extremely well. As a matter of fact, we closed this quarter at 863 crores in terms of pre-sales. And, I'd like to say this, that as of last year, the entire pre-sales that we had done, we've come in kissing distance of that already in the 9 months that we have kind of closed so far.
Okay, good to hear.
Already completed 5 launches as per our guidance.
Okay. Yes, please go ahead. We lost you for a bit.
Sorry about that. I said we've done 5 launches as per our guidance. We had said we do 8 launches this year, and you should see about 3 launches coming up in this quarter. And like I've told you in the past, Nigel, we are a company that generally watches a lot of data or digests a lot of data before making any launches. Our Dombivli launch, which is going to come up, is perfectly timed because the markets are going to give a big, high to the affordable housing space, or that which is considered in Mumbai as the affordable housing space. And Dombivli is a great market for us, and we're looking forward to that as well.
Okay, all right. So 5 launches done, 3 to go. Sounding confident with regard to demand. Give us a pre-sales number then. It appears mathematically at least that 3,000 crores is well and truly on. Can you all do better than that for FY25 as well as FY26? What kind of a number should we be looking at in pre-sales?
So, Nigel, like I've always said in the past, we believe in a sustainable and a steady growth. And we are well on our way to keep clocking a 25% increase year-on-year basis. And I think this year also we will delight our investors by crossing our target or our guidance target that was given, which was of 3,000 crores, because we are already at 2174 as per the 9-month results that we have released. And like I told you, we are having 3 new launches coming up in this quarter. All 3 great projects, and we expect to see great buyer demand, by which we should be able to cross the pre-sale numbers very comfortably and actually delight our investors. Like I've told you, the projects are all in Mumbai and MMR region, and we've always been a local player, and we've seen a great amount of traction coming towards us.
Okay, all right. What about the redevelopment market? That's an area as well that you all have been focusing on. As a percentage of your mix, what is it? And is it getting competitive? In various areas, you see a lot of redevelopment going on. Tell us your take on that.
Let me tell you, Nigel, when I got into redevelopment, the question people had was, is redevelopment tenable, or can people continue with redevelopment? The very fact that so many developers have gotten into this space shows that, it validates our point of view that redevelopment is definitely something that Mumbai needs. We have been at the forefront of it. As a matter of fact, the 19 projects that we've clocked in our BD ever since we've gone public, 16 are in the redevelopment space. So just to give you an idea, we are at about 16,000 crores of BD and plus, and of that, I would say about 13,000 crores approximately is what is there in the redevelopment space itself. And I think this is going to be something that will continue to grow. Mumbai needs to develop a lot more or redevelop a lot more. And given the infrastructure boost that is taking place, I think newer areas like Sobo will start growing in terms of the redevelopment out there. And we are already in that space, and we are looking forward to, establish a leadership in that market as well.
Okay, all right. Final question, Bhavan, before we let you go. I'm looking at your shareholding. It's a very tightly held company. You have 78%. That's a promoter entity. Institutions are in there as well. And more than 90, 96, 98%, I think, is held by a very few entities. But the stock price has come up from around 800 rupees to around 520 rupees odd. Any of these institutions have been selling? I mean, what does the team tell you all about it?
As per my last Ben post, I don't think there is much of a sale taking place from the institutions. As a matter of fact, the entire markets are getting, in a way, washed out. And we are hopeful that our Honorable Prime Minister's trip to the US will yield a little bit of a stopper to this downslide, if not a further, back to the original rates as such. But all I can do is control what I control. And our business is doing extremely well. And I continue to focus on, making sure the business does well. Everything else is, of course, the markets have to rule.
Okay, all right. Bhavan, we just thought we'll ask you about that because, as you said, business is looking up. Stock price has come down, but no large institutions have been selling. So we take your point on that as well. Thanks a lot for joining in and filling us in with all of those details with regard to the trajectory of business going ahead. By the way, but as we were having that chat, the SIP number, I think, flashed for this on the screen should be, and it's looking very, very good. 26,000 crores odd. No jitters on that front. No jitters in terms of the inflows. The bulls will like this.
This is excellent data, and in the market environment that we're in, this is phenomenal data. And obviously, kudos to the hard work that's been put in by distributors, by the entire mutual fund fraternity to drive home the point that you don't have to necessarily stop your SIPs or sell out of your funds when the market is falling. That's probably not the best thing to do. And I think that message has been driven home because throughout January, investors have been tested. It's not been a great month. And now that I look at it, the SIP number is strong. Large cap flows are up by 50-odd%. Small cap flows are up by 20-23%. Mid-cap flows have been steady. So it's really rock solid. Actually, the good thing is that NFOs have cooled down. A big NFO frenzy and party getting in 13,000, 14,000 crores. That hasn't happened. NFOs have pulled in about 4,500 odd crores, which is maybe not too bad. Some caution in a market like this perhaps is par for the course. Well, we do have to take a very, very quick break. Before we slip into that break, here's a programming reminder for our viewers. India's biggest SME award is back. Nominations are now open for the second season of CNBC-TV18's SME Champion Awards, which celebrate the champions of India's growth and innovation story. Scan the barcode on your screen to submit your nominations. Welcome back. You're with us on Halftime Report. Now let's take a look at the other big story that's playing out through the course of the day. We have, of course, picked up from sources the contours of the new income tax bill. Now, this bill is expected to be tabled in the Parliament tomorrow, and it has already been made available on the Lok Sabha website. So now it's actually come into the public domain, and the bill is available for wider public discourse as well. It's there on the Lok Sabha website. Let's straight away actually go across to our experts to try and understand some of the salient features of the new income tax bill. Remember, this is a bill that's going to replace the Income Tax Act of 1961. It has been a much awaited review, aiming and hoping for some simplification, more clarity, and perhaps a more concise act in itself. We have with us Mr. Dinesh Kanabar joining in from Dhruva Advisors. And we also have Mr. Mukesh Bhutani from BMR Legal. I think, we've got Mr. Bhutani as well. Thank you, gentlemen, both of you, for joining in. So I know it's an exhaustive bill. I don't know how much of time you've had to go through all the provisions, but let's start by understanding some of the broad thoughts. Mr. Kanabar, if you could open, does it address the main purpose of making the act more relevant and simple?
What the new bill has tried to do really is to keep the contours of the existing act as it is. It hasn't made many changes. So, for example, the scope of income remains the same. The heads of tax remain the same. The salaries, house, property, capital gains, everything is same. The taxpayers remain the same. So we have the same concept of individuals, HUF, LLP, etc. And the reason I mention this is that as it always happens before something gets introduced, there is a wide range of speculation as to what could the changes be. And many of these things were expected to change. But the bill has preserved all of them. What it has done is that, so for example, you had Section 10, and then within Section 10, you had Section 10, 1, 2, whatever, 50 odd subsections. They have all been put into a schedule. Similarly, you had deductions under Chapter 6A, which was ATC, ATD, DD, DDA, JJ, all of those. So they have been sort of serially numbered. And therefore, what has happened is that the number of sections has gone up from 298 to 536. The bill reads simple because all the provisions of a like nature have been put together. As the finance minister has assured, the provisos, the explanations have all been put out, and instead they have all been incorporated into sections. So not too many substantive changes, some changes which we can talk about as we go along. But overall, the bill continues to be what the Act earlier was, with no really material changes. It reads simple, it reads comprehensive. The only disappointment, if I may say so, which I do have, is that there was a big expectation that the bill will also bring about some material changes, A, to the dispute resolution provisions, and B, to some of the compliance provisions. That has not happened. Perhaps as we go along, there's a 2-3 year exercise where the law will be amended to make it more taxpayer friendly. So this is really more a drafting exercise than a substantive exercise, if I may say so.
Okay, all right, so it keeps the basic framework and the ethos of the original Income Tax Act of 1961 intact. And I heard Mr. Kanaba talk about the slight disappointment because dispute resolution has been a big demand from the tax fraternity, and perhaps some of those provisions immediately are missing, but maybe that's something that the department will work on separately. Mr. Bhutani, your thoughts, sir? What do you make of it? Headline stuff. What's the headline in this new income tax bill 2025?
Well, it's a welcome cleanup exercise. There are some interesting and reformative measures as well in the new bill. For example, there is now taxation of trusts or separate class of taxpayers called not-for-profit, which I think is welcome. And they have divided this in all forms of taxpayers, educational institutions controlled by the government, educational institutions not controlled by the government, public trust, so on and so forth. So there was a fair bit of disputes surrounding that area. So hopefully with the cleanup exercise that will get addressed. Second is also the concept of business trust that was defined, which encompassed a host of class of taxpayers like venture capital firms, specified investment funds, securitization trusts. They have all been segregated. So all in all, a good exercise for taxpayers who need to look at the relevant parts. Some of the misses that were not there in the definitional parts, like, for example, the term crypto assets was not defined. They've gone ahead and defined that. The law has been made a little bit restrictive in many ways. There have been some disappointments as well. I expected that the new code was a good opportunity to bring about some very reformative changes. Dinesh mentioned about a dispute resolution. There were many changes that were anticipated with respect to cleanup of many provisions which were resulting in disputes. So none of them has been carried out, but one can hope and anticipate that that would be part 2, or at least based on public consultation and consultation with experts, the government will listen to various stakeholders and carry out those changes.
Yeah, Mr. Bhutani, just want to try and come to some of these provisions one by one. You mentioned taxation of trusts, also business trusts and not-for-profit organizations. Now they're being treated as a separate tax entity. Does this in any way or form change the tax liability on these structures, or is it just providing more clarity?
No, it's just providing more clarity. Fundamentally, there is no change. So, for example, business trusts have all been classified as pass-through entities, which means the entities don't pay tax. The shareholders or the unit holders pay tax. Similarly, with regard to other forms of not-for-profit public trusts and other trusts have been kept outside the tax review. but they were scattered across many chapters or many sections of the extant code that we have. Now in the new code, they have all been clubbed together.
Okay, all right, got it. Let's take up the point on crypto, virtual digital assets. I don't think there's any change in the taxation, right, Mr. Kanabar? Crypto assets will continue to be taxed at 30%, right?
That's right. So there is no change at all on the substantive tax or the capital gains tax, either of the two. It is simply that virtual digital assets have now been defined as a separate class of asset. So in substance, it changes nothing except to sort of make things beyond a shadow of doubt. So really, it continues as it is. The changes that we have seen are some of the changes. So, for example, there is change relating to associated enterprises. So today, under the Income Tax Act, if a payment is made to an associated enterprise, and I'm using that word generally, then the tax officer has a right to see whether the payment is excessive and unreasonable. And if it is so, then the excess or unreasonable part can be disallowed. Now, there has always been this view, including right up to the Supreme Court, to say that the officer cannot really question whether an expenditure had to be incurred, legitimacy, etc. Now, what the law has been amended is to specifically provide that an assessing officer can go into the legitimacy and therefore deductibility and whether that expenditure was at all required to be got into. So in some sense, the officer will step into the shoes of a taxpayer and sort of question the expenditure. That is sort of one part where an expenditure.
So Mr. Kanabar, correct me if I'm wrong. This was, you're saying that as of now there was complete clarity at the Supreme Court level as well, that the tax officer cannot get into some of these nuances about the legitimacy of whether this expenditure should have been incurred, not incurred. But now this bill is opening this up. So in effect, does it not perhaps open up the scope for further litigation, because the tax officer can come in and ask whether this was legitimate, non-legitimate, how much was the benefit incurred on this expenditure, etc. So isn't it actually, couldn't it perhaps lead to more litigation on this one aspect?
So on this, there has been really a flip-flop, Survi. So earlier, there was a domestic transfer pricing, which was there for a few years. Then the domestic transfer pricing went away, and transfer pricing provisions currently apply only to international transactions. Now, while domestic transfer pricing has not been reintroduced, but if one had to really substantiate the expenditure, then probably one might have to talk about domestic transfer pricing, and the officer can really go into a question as to whether the expenditure should have been incurred at all or not. So yes, any new use of words can lead to its own interpretation, and therefore probably a controversy around it.
Okay, all right. Mr. Bhutani, if I could come to you, slight paucity of time. But I think the other sort of details are well known, that the tax year will replace the assessment year. So instead of AY, we'll now call it the tax year. And the previous year will continue to be the financial year. On TDS, I mean, while some statements have been made by the finance minister in the budget as well, but did you notice anything in specific in terms of a new TDS framework, instead of multiple rates, bring it down to 4-5 rates? Is there anything on that you perhaps picked up?
No, there is no change in the TDS rates. Whatever relaxation was given, proposed in the finance bill of 2025, they remain at that level. In fact, if you look at the code, it's very clearly evident that the drafting exercise started predicated on using the Finance Act 2024. So many of the changes that were introduced, the simplification changes with regard to TDS in the bill of 2025, do not find any mention in the code as well. So the bottom line is no change in tax rates, no change in deemed profit provision, actually no changes at all on the charge of income tax with respect to any class of taxpayers.
Which is fine, but it doesn't meet, okay, final 10 seconds, does it meet the original objective, which is, simplification and perhaps eventually leading to lesser litigation as well? Does it meet all your expectations, Mr. Bhutani? 10 seconds.
Well, if I was supposed to write it down, I would write it down differently. Let's put it this way. As I'd mentioned, there is an opportunity to reform it, to make it more modern. I think that the elements of modernity and reformative in the first brush look is missing in my view.
All right. Again, 10 seconds. Final word, Mr. Kanabar.
Just very quickly, Surbi, if I may say, so one change which I have just noticed is that there was a controversy with regard to the gift city as to whether the income which is exempt in the gift city should only be for dealings with other gift city unit or they can deal with anybody else. That has been clarified. In my interaction with the officials from Niti Aayog, what I had understood, Surbi, is that this is a 3-year process and it is not going to happen in one shot. So what it has done just now is merely sort of to tabulate and make it more wieldy rather than unwieldy as it was, remove all the old provisions, and the changes will come now over a period of time. So lot more to be done, yes.
Okay, lots more to be done, but perhaps a step in the right direction. That's the view from our two experts here. Thank you both so much for joining in and giving us a first-cut analysis of what this bill is bringing about, the new income tax bill of 2025 to replace the Income Tax Act of 1961. Well, on that note, we have to take a very quick break, come back with a lot more on the other side.
Welcome back. Well, as promised, let's get straight to our next management. We have Mr. Nikhil Chopra, the CEO and whole-time director at JB Pharma, who joins us on the show. Hi, Nikhil. Good day. Good to have you on the show. Well, operationally, your numbers are pretty good.
Yeah.
The domestic formulations business. Yeah, the domestic formulations business, actually, the growth out there was quite good, impressive. Early 20s, 22% or thereabouts. Could you tell us what's the outlook for this year? And also, if you could tell us the CDMO business, that as well has started, showing some good signs in terms of growth. What's the outlook on both these two?
So, Nigel, it was a good 9 months as what we have scored, close to 3,000 crore revenue for 9 months of the year. And India continues to dominate now, contributes around 60% of the revenue, which obviously is showing a growth of 22%, but this does not have the opthal base. Otherwise, the business is growing at 13-14%. And the outlook for India business continues to be market beating, around close to 12-14% as compared to Indian pharma market growth, which also was reported in the month of January. IMS, the market grew at 8% and we grew at 13%. So that will continue to happen, backed up by only continue to improve our contribution coming from chronic therapy. That is what I've been talking earlier also. Coming to CDMO, we had a very good quarter, but we should not look at 32% growth, because there was some business which was deferred from quarter 2 to quarter 3. But there are good number of new marquee projects which are on in the world of CDMO, and we continue to commit to our guidance that we want to take this business to $100 million in next 4 years as compared to where we stand today, $50 million. And this is also contributing 12% of the revenue.
Okay, interesting. What about profitability? Margins have been in that vicinity of 26 to around 28% or thereabouts. What's the plan to improve it from here on? Is there a risk to these margins?
So, Nigel, if you look at it, last 3 years, we have been revising our guidance on margins, starting with 24 to 26%, then came 25 to 27%, and now our guidance is 26 to 28%. And whatever we have been guiding, we are always on the upper side of the guidance. If you look at our operating EBITDA margins, what has been reflected on the screen is margins, but we talk of operating EBITDA margins, which are 28 to 28.1%. So we will continue to drive margins, which are obviously on the higher side of the guidance, and we'll continue to at least look at growth, which is much more profitable also in the coming time.
Okay, how much more profitable? You want to give us a rough range, or what is the aspiration?
So there will be a 200 bips improvement in delta, which you will see in FY27 with the opthal business that we have in-licensed, which will be getting the perpetual license in January 27 when we pay Novartis $100 million. At that time, you will see a good jump in the absolute EBITDA margins. But at the right time, as on current business, though we have absorbed a 200 crore revenue, still we are able to score 28.1% margin, because there was a dip of 150 bips points, but that we are absorbed because of the better mix of the business, because of chronic business going up in India business, because of CDMO contributing more. So probably at the right time, we'll be more than happy to give new guidance on the margin, which only will be upwards and onwards.
Okay, all right. Mr. Chopra, did you have a word with the promoter entity? They must be so pleased, right, with the performance that you all have been given?
So we continue to have our regular dialogues with the promoters and our board meetings, quarterly performance that continues to happen as usual.
All right. So in any of those discussions, have they mentioned what's the plan next? This has been a good asset that has turned around for them. And because of the nature of the business, at some point of time, you search for a buyer. Has that time come?
So that is at the end of the day, the promoters call. We continue to focus.
So I asked you, Mr. Chopra, if you had a word with them. They are happy with the performance. So I want to know whether they have told you anything with regard to what are their plans in terms of running the company.
So they continue to be happy investors. We have been, the current discussions are right now, we are having is on the next 3-year plan that we continue, that how do we continue to bring more trajectory in the business and continue to invest in the business. That is a dialogue if you want to know what I had with the promoter.
Okay, so nothing with regard to, change of hands on the promoter entity, but for the time being, they are satisfied with the business. And thanks a lot, Mr. Chopra, for joining in. As you said, you're outgrowing the market. There is a tailwind as well with regard to margins, and you're sounding quite optimistic about the prospects going ahead on various businesses. Thanks a lot for joining in. Well, before we slip into that short break, take a look at the markets. The Nifty Bank is the one that's moved into the green. The number of stocks advancing is hovering around 1,000 odd stocks. So that's good news as well. Slip into that break, come back. We'll continue to focus on markets. Welcome back. Well, we've seen a good recovery intraday, and a couple of factors are played out here. This morning, we had the PCR that went to the lower end of the range. It went down to around 0.65, and from there, we did see a bit of a bounce. When you look at the PCR at around 0.65, it's normally the case when, in fact, we do see a bit of a bounce. That's point number one. Point number two is the question is, have we made a near-term double bottom? That is the hope, at least, because in the last 15 sessions or so, twice we have gone to around the 22,750 to around 22,800, and we've seen a bit of a bounce. So the hope is, have we made a double bottom? That's going to be important to watch. And if you're looking at the options data, a couple of strikes should come up for you on the screen. The 22,800 put, that's seeing a mix of activity. Remember, this is the contract that will expire tomorrow itself. Massive open interest built up out there. There's a mix of buying as well as of writing at that level. But at around the 23,000 call, you can see that, right? Though we're trading a little above that level, still you see the premium is crashing out there. So there's aggressive writing that you're seeing at this particular level. The level you'll be looking at on the upside is around the 23,150, 23,200 odd mark getting taken out. That's what could cause a big short covering bounce as well, because the options data suggests that the bears are getting very, very confident. Let's pull up that strike again, the 23,000 call. That should come up for you on the screen. So aggressive writing being seen on the call side. If we can get past that level, that'll be very, very good news. So keep an eye out on that. And the Nifty Bank. Yesterday, it dipped below the 20-day MA. Today as well, it dipped below the 20-day MA. As we speak, it's trading mildly above that. You want it to close above that mark from a bullish perspective. So we'll keep an eye out on that one as well. Well, for the time being, I think we need to slip into a snappy break. We come back, we'll continue to focus on markets as well as stock-specific action.
Welcome back. Aero India 2025 is currently being held at Bengaluru's Yelahanka Air Force Station. In attendance are a defense minister as well as companies from over 90 countries. Our colleague Madiha Mujawar caught up with the managements of Idea Forge as well as Paras Defense and spoke about their order book and outlook ahead after Q3. Take a look.
Netra 5, we are offering today, starting today, we are offering it as an early access platform because we've just released the platform. So we are offering it as an early access technology where users can experience the technology in the field and work towards the various budgets and other activities that they would want to leverage for a technology like this. There are international customers who are excited about a technology like this. There are customers within India who are extremely cautious because a lot of this technology is also, the challenges are being faced by us also on our borders.
My order book looks handsome, more than 800 crores, and as we talk, I am expecting larger orders. Some orders I know will be making the news in the coming future.
From where? Give us some hint.
It will be from DRDO, and I want to restrict it to that. But more and more power being given to DRDO. DRDO is offloading their development and development of critical technologies to industries like us. And you will see that will make the industry a very, very solid force to reckon with. When we start developing technologies which otherwise only was being done by DRDO, we can productionize it much faster.
Welcome back. India Energy Week is underway in New Delhi with over 120 nations participating in the 4-day event. My colleague Manisha Gupta caught up with Per Magnus Nysveen of Rystad Energy and started by asking about his outlook on crude prices in the current uncertain environment.
It's very clear that there is an oversupply in the market, so OPEC really has to take action, and they have done that very much, and they decided also to continue cutting. At least until the second quarter of this year. And now with some pressure from the Trump government to ease up the oil market to reduce the pump prices in US, right. I think we can expect actually OPEC to provide some new oil from the second quarter. Partly based on Trump's pressure, but also partly based on that the oil price is relatively high because of geopolitical risks.
With the kind of opening up that we are seeing in the U.S. markets after the President Trump has come in, do you see much more increase in production from there? Because we already are around 13 million barrels per day, which is near record high in sense of production.
Trump cannot do anything with the oil production in the U.S. because that is decided by the corporations and the investors. They want quick cash, so they want to see more investments into the oil development. But what Trump can do is with the LNG export, because Biden, he held back on the approvals of new export licenses, but now Trump will let that flow. And the market really need more LNG. Look at Europe, that doesn't have gas from Russia anymore. Right. So that is very important for the gas markets.
How do you look at the recent tariffs? And even as they would not have a direct impact on crude as per se, do you see an indirect impact, and a big one at that?
Of course, you know, if you don't open up for free trade in the world, you see less GDP growth for the world. So and oil is very correlated with GDP growth. So we will definitely see a calming of the oil demand if the global economy is being hurt by this trade. But let us hope that these tariffs is just a kind of negotiation weapon to get in a very strong position. And that's a little typical Trump, isn't it?
Yes, that seems to be the case right now. You know, last year, all of the last year was about Chinese demand not picking up. What is the theme that you see playing for 2025?
On the demand side, India is one of the countries with very stable demand growth going forward, despite the electrification of the two-wheelers that we see here in Delhi now. It's amazing to hear these silent two-wheelers all around. And that moderates the oil demand growth in India, but we think it will grow at least by 1 million barrels from the present levels of around 5 million barrels to something like 6 million barrels or a little more 5 years from now.
You know, the Minister Puri keeps saying all the time that, you know, initially, perhaps a decade back, we would import only from 4 or 5 sources. But right now, there are perhaps 30 countries that India seems to be importing oil from. It clearly is positive the way the markets are moving right now.
Yes, we have seen a lot of countries outside OPEC that has increased their oil production. Guyana is an excellent example, also Brazil. So there is a diversification of the oil supplies in the world, and that is maybe a sign that OPEC might lose a little power. And also US oil production is growing, despite this investor attitude of holding back investments.
With the way the markets are changing, and while we do understand that OPEC and allies don't always agree or get along on various things, would this change a lot of internal systems within the OPEC itself?
It's true, OPEC countries are just as different as any other countries in the world. So, but the oil growth is coming from the Middle East countries, Saudi Arabia and Emirates, and they have the true power in OPEC. So I think they will be able to act as an organization, despite these very diverse political views that you see inside OPEC.
All right, those are views coming in on the global energy markets. We'll take a break on that note. Thank you very much for being with us on this edition of Halftime Report. Business Lunch takes the action forward.